Wall Street just filed a Pepe ETF. Yes, a frog meme coin. Not Bitcoin, not Ethereum, a meme. And it's turned into an institutional investment product. Now, if that doesn't make you stop and think about where the market is heading, nothing will. Because today, we're not just talking about Pepe. We're talking about what this means for crypto in general and what it tells us about where the money is going and why this could be one of the biggest signals yet that the game has officially changed.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Right, let's break this down properly. A firm called Canary Capital has filed for a Pepe ETF with the SEC. Now, if you're new to crypto or investing, an ETF is an exchange-traded fund, and it's basically a wrapper. It allows traditional investors to gain exposure to an asset without needing to set up wallets, use exchanges, or understand crypto at all. They simply just click buy in their brokerage account. And we've seen already how powerful this is. When ETFs launched for Bitcoin, it brought in billions. It opened the door for institutional money and it legitimized crypto in the eyes of traditional finance. Then came Ethereum, same story, more validation, more exposure, more capital. But now they're looking at Pepe. And that changes the conversation completely for me. Let's be honest, Pepe is not trying to be the future of finance. It's not trying to replace banks. It's not trying to solve global problems. It's a meme coin. And it launched in 2023 with no roadmap, no utility, and no grand mission. And yet it exploded. But why is that? Because of attention, because of community, and because of a viral momentum. And this is where people often get these things wrong. They try to apply traditional logic to something that doesn't operate under traditional rules. Pepe is not about fundamentals. It's about liquidity, momentum, and psychology. And that's exactly why this is so dangerous and so powerful at the same time, because it shows you what this market is really driven by. Let's zoom out for a second, because this didn't happen overnight. The ETF story has had a progression. First, Bitcoin. That was the easy one. Digital gold, store of value, and scarcity narrative. Then came Ethereum, and that's technology, smart contracts, and infrastructure. Then slowly, the boundaries started to expand. More assets, more experimentation, and more risk. And now we've reached meme coins. And that is a massive leap because it tells you something very important. Institutions are no longer just looking for safe crypto exposure. They're looking for what people are actually trading. And that's a completely different mindset. Now, to be fair, this isn't the first time that we've seen this. I've already seen conversations and filings around the Dogecoin ETF. And Dogecoin makes sense, relatively speaking. It's been around since 2013. It has a massive community and it's survived multiple cycles. And let's not forget, it had the backing from people like Elon Musk, which has kept it in the spotlight. But here's the key difference. Dogecoin still has a narrative. You can argue payments, adoption, longevity, but Pepe strips all of that away. It's a pure meme coin. It's pure attention. It's pure speculation. It literally is a meme coin about a frog picture. And if institutions are now filing ETFs for that, then we've crossed a line. This is the most important part of the video, so really take this bit in. Crypto has evolved. It's no longer just about technology, fundamentals, and use cases. It's now about attention. The assets that perform the best are often the ones that capture the most attention. Now, think about it for a second. Dogecoin didn't explode because of fundamentals. Shiba Inu didn't explode because of utility. They exploded because people were talking about them, people were sharing them, and people were buying them. That created momentum, and momentum attracts more attention, which creates more momentum, and it's a cycle. And what we're seeing now is institutions recognizing that cycle. They're not ignoring it anymore. They're not laughing at it. They're now packaging it. Now let's bring this back down to earth, because this doesn't mean a Pepe ETF is launching tomorrow. This is just a filing, and there are still some missing pieces. No confirmed exchange, no ticker symbol, no final structure. But for this to actually go live, there would need to be further approvals. So this could be a genuine setup towards a real product, or a strategic headline to test demand. And both of those are important, because even if it never launches, the fact that it was filed at all is the signal. So what do we actually do with this? Here's how I'm going to approach it. The first is the narratives are everything. If institutions are chasing attention, then spotting narratives early becomes your edge, because by the time something becomes mainstream, the move will already be done. Second, you don't have to love it. You don't need to believe in a meme coin. You don't need to marry them. You don't need to understand them, because ignoring them completely means ignoring money is flowing in their direction. The third thing I'm going to be looking at is think like a hedge fund. This is key. You need to remove emotion, remove bias, and think, where is liquidity going next? And that is how the professionals operate. They don't argue with the market, they follow it. Fourth, I'm going to be looking at managing risk properly, because let's be real, meme coins are volatile. They move fast, they can make you money quickly, but they can also take it away just as fast. So if you're going to play in that space, you need a system. And this is exactly why I always say you need a strategy, not opinions, not emotions, a strategy. Because whether you're in a bull market or a bear market, the people that win are the ones that follow a system, they manage their risk, and they stay consistent. Now, if you want to learn exactly how I approach this, I've put together a completely free course. It's called the Crypto Liftoff course. And inside that, I break down the exact strategies I use to make money in bull markets, and more importantly, multiple bear markets. So if you want access to that, then head over to cryptowolfpack.co.uk, or just use the link in the description. It is completely free. You are not going to get halfway through this course and I'm suddenly going to go, send me $500 for all the secrets. That is not what I'm about, okay? This is 100% free. Click on the link and go and check it out. So this course is going to give you a solid foundation to build from. Now, let me leave you with this. A few years ago, the idea of a Bitcoin ETF sounded crazy. Then it happened. Then Ethereum followed. And now we're talking about Pepe, a meme coin. Literally a picture of a frog, all wrapped into a financial product. That should tell you everything. This market is moving fast and it doesn't wait for anybody. The people that win and the ones that adapt are the ones that understand where things are going, not where they have been. If you enjoyed this video, then please drop me a comment down below so I know that you're part of the pack. And also don't forget, I also co-host the UK Crypto Podcast alongside Paula Talks Crypto. We release a brand new episode every single Friday at 7 p.m. I'm going to link the playlist at the end of this video so you can jump straight in and check it out as soon as you finish this video. And as always, stay smart, stay consistent. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.